This ship is carrying $40 million worth of electronics from Shenzhen to Los Angeles. The Chinese factory that built these products paid in yuan. The American retailer waiting at the dock pays in dollars. But here's the thing. The transaction itself happens in dollars. Not yuan, not euros, dollars. And this isn't an accident. Every day, $6.6 trillion moves through the global financial system. And nearly 90% of it, every trade, every contract, every invoice, touches the US dollar at some point. But the United States only accounts for about 25% of global GDP. So why does their currency control everyone's trade? The answer isn't economics. It's power. And it's one of the most important systems most people never think about. This is the story of how the dollar became the world's economic operating system, and what happens when countries try to unplug. Here's the question no one really asks. Why do two countries that have nothing to do with America still use American money to trade with each other? Why does a German company buying oil from Saudi Arabia settle the deal in dollars? Why does a Brazilian airline leasing planes from France sign the contract in dollars? And why, when Russia was cut off from the dollar system in 2022, did their economy nearly collapse overnight? To understand that, you need to understand how money actually moves around the world. And it's not what you think. Let's rewind to 1974. The US has just come off the gold standard. The dollar is floating, and Middle Eastern oil producers, the global energy kingpins, are deciding what currency they want to be paid in. The US makes them an offer. Sell oil in dollars. In return, we'll protect you militarily, invest in your infrastructure, and recycle your oil revenues back into US Treasury bonds. Safe, stable, American debt. Saudi Arabia agrees. Then the rest of OPEC follows. Suddenly, every country that wants to buy oil needs dollars. Not because the dollar is backed by gold, but because oil, the most important commodity on Earth, is priced in dollars. So nations start stockpiling dollars, holding them in reserve. And the dollar becomes the default global currency, not by treaty, but by necessity. But there's a second layer. If you want to move money across borders, you need to plug into the global banking system. And that system runs on something called SWIFT, the Society for Worldwide Interbank Financial Telecommunication. Think of it as the internet for money. Every international wire, every trade settlement, every cross-border payment, it routes through SWIFT and SWIFT, is controlled by Western banks, and denominates most of its traffic in dollars. Here's what that means in practice. Let's say you're an Iranian oil company. You sell crude to India. India wants to pay you, but because of US sanctions, you're blocked from accessing SWIFT. So even though the US isn't involved in the trade, they can kill the transaction. They don't need to invade. They don't need to blockade your ports. They just cut off your access to the financial system. This is why dollar dominance isn't just economic. It's geopolitical leverage. The US doesn't just control a currency. It controls the infrastructure that global trade runs on. So why don't countries just switch? Because there's no alternative that's big enough, liquid enough, and trusted enough. The euro? Strong. But the eurozone is fragmented. No single fiscal authority. The yuan? China's capital controls make it nearly impossible to use freely. Gold? You can't email gold to pay for a shipment of microchips. So even countries that hate the dollar system still use it, because opting out means cutting yourself off from global trade. Which brings us to the countries that tried. February 2022, Russia invades Ukraine. Within days, the US and Europe freeze $300 billion of Russian central bank reserves, cut Russian banks from SWIFT, sanction oligarchs, energy firms, defense contractors. Russia's currency collapses. Inflation spikes. The stock market shuts down for a month. But here's the twist. Russia had been preparing for this. For years, they'd been stockpiling gold, building trade ties with China, and pushing for alternatives to SWIFT. They launched their own payment system, SPFS. They started settling oil deals in rubles and yuan. And it worked, partially. Yes, the sanctions hurt, but Russia didn't collapse, because they'd spent a decade building financial workarounds. The lesson? If you're big enough, you can survive outside the dollar system, but you need time, resources, and powerful allies. China's playing a different game. They're not trying to replace the dollar overnight. They're building parallel infrastructure. They launched CIPS, the Cross-Border Interbank Payment System, a Chinese alternative to SWIFT. They're signing currency swap agreements with dozens of countries, letting them trade in yuan instead of dollars. And through the Belt and Road Initiative, they're financing ports, railways, and energy projects in Asia, Africa, and Latin America, often denominated in yuan. In 2023, Saudi Arabia started accepting yuan for oil sales to China. That's huge, because it's the first crack in the petrodollar system that's held since 1974. China's message is simple. You don't need dollars to trade with us. Use our currency. Use our banks. Use our system. But here's the problem. Most countries still don't trust the yuan. China's economy is opaque, their legal system is unpredictable, and if Beijing can freeze Russian assets, what stops them from freezing yours? For most of the world, the dollar system isn't a choice. It's a trap. Let's say you're Argentina. Your economy runs on imports, fuel, machinery, food, but you need dollars to buy them. So you borrow dollars. And when your currency weakens, your debt explodes. This is the dollar trap. Borrow in dollars. Currency weakens. Debt becomes unpayable. Borrow more dollars to pay the debt. The IMF steps in, demands austerity, cuts spending, raises interest rates, and the cycle repeats. This isn't conspiracy, it's structure. The global financial system is designed to favor dollar holders. And if you're not one of them, you're constantly fighting to stay afloat. So here's where we are. The dollar is still dominant, but the cracks are showing. Russia and China are building alternatives. Saudi Arabia is hedging its bets. India, Brazil, South Africa, the BRICS, are talking about a shared currency for trade. Even France's president has called for Europe to reduce its dependence on the dollar. But let's be clear, the dollar isn't going anywhere soon. It's still 60% of global reserves. Still the default for oil, commodities, and debt. Still the safest place to park money during a crisis. But what is changing is the monopoly. For 50 years, the dollar was the only option. Now, it's just the best option, and that distinction matters. Because the more alternatives exist, CIPS, SPFS, digital currencies, commodity-backed trade, the less absolute America's leverage becomes. So what does the future look like? Probably not a single replacement. Probably not a sudden collapse. More likely, a fragmented system. A world where the dollar still dominates the West, but the yuan dominates Asia. Where oil is priced in multiple currencies. Where countries pick their financial bloc the way they pick their military alliances. And if that happens, the US loses something it's had for half a century. The ability to control the global economy without firing a shot. Because in the end, the dollar's power was never about economics. It was about making the world need you. And need is the most valuable currency of all. If you want to understand how money really works, check out next video. And if you made it this far, you're in the top 5% of viewers. Hit subscribe.